Mostly. That the camera in the back. So if you try to watch this one afterwards, it's not going to be very good. So good job being here. You get to see the good version of it. Cody Sorenson, Snap Finance. Had several different stops along the way, so he's going to tell us all about his adventures in finance. What year did you graduate?
2017.
17. Okay, so been a little bit, so he can talk to us about that career path and what's kind of taking in different directions. So he's just going to open up the questions as we go. So if you have questions, fire away, and I'll just turn the time over to him. So thanks so much for being here, Cody.
Yeah, you're welcome. Thanks for having me, guys. You already have a question?
I was gonna ask him what is this?
FinTech.
They would do it.
I'll send out an email. Don't worry about it for now. I'll send out an email and make sure we get the right one. Because we did have a quantitative finance and I might have those together. So I'll send out an email and you can copy and paste it into there.
Perfect. Any other questions before we get started? Sweet. So like Professor Whitby said, my name is Cody Sorenson. I've kind of jumped around the finance industry a little bit. And I would be more than happy to field questions the whole time. So that would be great. So a little bit of background on me. I attended Utah State from 2015 to 2017. Before that, served a LDS mission and also went to Utah Valley University before that. So I transferred up here, majored in finance and economics. How many of you guys are planning on going to major in finance? I would imagine majority of you. How many of you guys, well, first off, how many of you guys are sophomores? Freshmen? Juniors? Any seniors in here? Sweet. We got a wide range of students in here. Then after I graduated from Utah State, I went on to work at Morgan Stanley in their private banking division. And that was just here in Salt Lake for about 3 years. And then decided to go back to school to the University of Utah. Majored or got my master's degree in finance. I think if I remember correctly, you also did that.
I have one of those.
Yep. And then after that, that was kind of a fun year. Some of you guys may have known COVID happened during that year, which wasn't the greatest going to school. I tend to learn a lot better in person rather than online. So those of you online, props to you guys. And then after that, I went to work at Intermountain Healthcare, so a major healthcare organization here in the Western United States. I was actually there for only about 2 months, 3 months, and then got recruited to where I'm at now at Snap Finance. On the
question. In terms of the transition back to school, were you just looking to do something different? What was kind of your thinking in terms of going back?
So yeah, I'll get to that in a sec.
Okay,
Because yes, there was definitely thoughts around it, but just a short answer. I currently, or in my role, I didn't see too much of a moving up or increase in workload. And so I thought it was time to maybe pivot, go back to school, learn what I really wanted to do, and I'll get more into that later. But yeah, to answer your question short, that's kind of why I went back to school. And then I've been at Snap Finance since May of 21. Loved it, and I'll get into some stories about mergers and acquisitions. How many of you guys know what mergers and acquisitions means? A few? You raised your hand. What do you think it means?
Well, isn't that when you like?
Correct. So, like she said, thank you for answering. So like she said, so mergers and acquisitions, you pretty much go out and trying to acquire another company for different synergies, for maybe people that you want to have working for you. It's like an acqui-hire. So there's different kinds of acquisitions that you can make. And I'll get into a few more stories. We actually just completed an acquisition late last year. And I can go into some stuff about that. So I figured to get things going, I put into GDP what to tell an introductory finance class about careers in finance in 100 words. So the funny thing is it mentioned five different areas of finance. I would say there's a lot more, but you have investment banking, which I understand you'll have some investment bankers or someone in that field coming in. You have corporate finance, you have FP&A or financial planning and analysis. You have wealth management, risk management. And I'd say mergers and acquisitions kind of fall under investment banking a little bit. And I'll get more into that. And then just to get things going again, I asked GPT this, what does M&A in finance encompass? And so I just wanted to go through the bolded areas. So combining or acquiring businesses to create value and improve a company's performance. So like you said earlier, this is to improve, to create value. That's the goal of mergers and acquisitions. If you're going to spend money on something, you want to get a good return. You want to create more value than what it was currently. And then M&A encompasses a range of activities such as financial analysis, due diligence, negotiation, legal and regulatory compliance, and post-merger integration. So that's kind of what my role is, what I do on kind of a day-to-day basis with mergers and acquisitions. Right now, we're in the post-merger integration. And I'll get more into that. Do you guys have any questions about what mergers and acquisitions are? What would you be doing? Huh? Sweet. All right. So revisiting my background in detail. So while I attended Utah State University, I had two internships, one with the CFA and one with the CFP. I thought I wanted to manage money for people, make investments. And that actually stemmed, if you haven't taken the investments course, or do you still teach that?
I teach online now, but yeah.
It was better in person.
It is better in person.
But if you haven't taken that course from him, very good. Highly recommend it. And then I'll throw out another pitch here. My uncle also works here, Ken Sorenson. So if you've taken a class from him, he's a cool guy.
I did not realize he was your uncle.
Yeah.
Fantastic. Connecting the dots as we speak.
Exactly. So I don't know what classes he teaches. I know he taught maybe a corporate finance class or an introductory corporate finance class. So if you haven't taken any classes from him, I would highly recommend it.
He teaches 3200 and he teaches international.
Oh yes, international. So kind of diving into my internship opportunities. So CFA, Chartered Financial Analyst. There's 3 different tests you take to get that. And I believe there's not that many people that can pass all those. So with that internship, I did it during the summer. I can't remember what summer it was. About 20 hours a week. What I would do is they assigned me like a sector in the stock market to go research. So I think I was researching oil at the time, looking at oil companies. What oil companies should we invest in? And at that time, I think the price per barrel was like $60 or something like that. It was kind of cool. Some of the things that I learned from that was a lot of research. There's so much research going into that. So these guys make so the people that I did my internship for, they manage people's money. They go out and individually pick out stocks that they want to invest in. And so I had the opportunity to go ahead, research the sector, figure out which companies sounded interesting, figure out which companies were undervalued in my opinion. meaning that we could go buy some stock. We believe that it would increase and make money. And so I had the opportunity to research. I went out and reached out to their investor relations just to get kind of their sense on what they thought the market was doing, specifically in oil. I also had phone calls with some of them. So it was a neat experience to get my feet wet with that. And then at the end of the internship, I had the opportunity to present which stock I thought would have outperformed. If I remember correctly, I think I picked like ConocoPhillips or something at that time. And I think it's done quite well since. I don't know if they invested in it. That's all right. And then my other internship that I did while I was in my undergrad was CFP, so Certified Financial Planner. So I interned with Utah Medical Association Financial Services. So pretty much financial planners for doctors. Okay? And so this ranged from, doctors clear into their career or doctors still in school, racking up debt, just trying to help them out. So that one was kind of different in the fact that we would meet with the different doctors, figure out their financial plan, and then kind of create a tailored plan for them. So that was more of learning how to trust people, learning how to meet with them, gain their trust, and yeah, I did that one for a whole summer and learned a lot from it. And I was actually planning on going down that route. And then while I was still going, had some more classes that I was taking, and I figured I did not want to go down that route anymore. To be a financial planner just didn't suit what I wanted to do. And that's a really neat thing with finance, because there's so many different areas you can go into and you can pivot pretty quick. Any questions about any of the internships? Okay. So I would imagine most of you know who Morgan Stanley is. Pretty large investment banking, private wealth management company. So I started right out of college. I had my job lined up when I graduated from college. Went and started, I think it was in summer of 2017, and started in their asset-backed lending business. And who of you know what asset-backed lending is? Sweet. Awesome. So pretty much what asset-backed lending is let's say you have a portfolio, or you have an account at Morgan Stanley. Let's say you have $100,000 in it, right? And you have it based on stocks, you have it based on bonds, you have it based on real estate investments. So you just have a mix of all these different investments. And then what you can do, and what kind of my team did, was we would lend based off of those securities. So for each security, we would maybe lend 50% of that. So if you had stock in Disney, let's say, we would lend 50% of your value in Disney. So if you had $50,000 in Disney, we could lend you up to $25,000, right? And so that's just a way of managing people's cash flow. If they wanted to bring out like a personal loan, they could apply for that. They wouldn't have to sell anything, and we could lend based off of that, charge them an interest rate, and lend them money. So that's what I did for about 2.5 years. Started out as an analyst 1 for the first year, moved up to an analyst 2, analyst 3, and then moved up to an associate. And then while I was there, I also had the opportunity to be a team lead on that, and manage a small team of about 5. And we would go in, instead of doing like the day-to-day, making sure that like reading through documents, making sure that their stocks didn't decrease in value to where we would have to then say, hey, you need to pay down your loan because we can't support your loan anymore. And so we didn't do much of that. It was just more ad hoc once I got there. Ad hoc meaning, hey, what happened with this account? Why did it show up on a report? Hey, what happened with this account? Is this a tech issue? Is this issue with like their loan account being too much? Are we over lending to them? It was just more of, hey, let's figure out these one-offs instead of doing more day-to-day stuff.
Is that a typical progression from analyst 1, 2, 3? I mean, in 2 years, it seems like it usually people are a little bit longer in each one. Or was that typical for that asset-backed division or?
That was pretty typical for Morgan Stanley, specifically in their operations. Now, if you went into like a financial planner, there's different things. So I think you just start out as a financial planner and then move up to, I think it's a director and then assistant vice president. So there's different angles in Morgan Stanley for progression, but to Professor Whitby's point, where I was at, and I would say the majority of maybe financial operations, it's analyst 1, 2, 3, associate, and then director, and then assistant vice president, so on. But it's pretty typical if you're a hard worker, if you do get things done, I'll grab you in a sec, that you can move up pretty quick. Question?
What was something that set you above the herd, Morgan Stanley, to look at you to hire you out of college?
Great question. I think just being very good, like making sure your resume, what you look on paper is very important because you can't put any emotions into that. You can't bring out any of your personality. So I think making sure your LinkedIn, your resume is all up to date and current, and depending on which job you're applying for, altering your resume to suit that situation.
Gotcha. Cool, thank you. Would you say your 2 internships play a big role into getting that job?
I think so. Yes. I think anytime you can get yourself an internship, even if it's maybe not something you want to go into, I think it's very important to get that experience, because I don't know how many of you guys currently have a job or have had a job in the past, but just having that experience of saying, hey, I've already done this, like maybe for my internship, I did researching, which then helped me get this role in mergers and acquisitions. Like, you don't know what the skills that you can get from these internships and then lead you along. So. Is there a hand over here? Okay. So getting back to Professor Whitby's point, I kind of hit a point in my career early on that I was like, I'm not really, like, I've made a team lead as associate. And usually after you hit like associate, it's typically about 2 years till you get another promotion if you're killing it. If you're not, you could probably sit there for a while. And I just started thinking to myself, this is what I want to do. So I kind of hit an inflection point. I was like, I don't know if I want to do this. And so there were a few people that joined right before me that were killing it as well. And I was like, I think one of them will actually get promoted, and she did. And I was like, I don't know if I'm not going to have that career progression that I want. And so I started looking, I think it was in about September, August, September, about looking to go to grad school, just to further my knowledge. And so then I started applying. I started looking to see if there were places that would take me in January, because usually with grad school, they'll start only in the fall. I don't know if that's changed since COVID. But the majority of the ones that I was looking at, both West and East Coast, were starting in the fall, and I didn't know if I wanted to wait that long to start in the fall. And then I came across the U, and I was like, all right, let's look it up. And they stacked very highly against all the East Coast schools in finance. And I was like, oh, this is interesting. And I started looking more, and they start in the fall and in the spring or the beginning of the year. I was like, oh, this is perfect. And so just prep for the GMAT, took that, got a good enough score. I don't think now a lot of schools actually require it. I know the U doesn't. But took the GMAT, got a good score, got a partial scholarship, and was able to go into grad school. Any questions? So while I was in grad school, I learned a ton. Even though it was during COVID, that was a little bit rough, because you're like, oh man, I'm paying this much to learn online. What is this? But again, my preference, I love to be in an actual classroom, sitting there present. But I learned a ton. Had a bunch of teachers that were from the industry. So like there was one professor that was the president of IBM Japan for a while. There's another one that was on Wall Street trading bonds for a long time. And I could go on, but there was a lot of new things that I learned that maybe I didn't learn in undergrad, that really helped me in kind of pivoting from like a more financial operations to now is like, well, I could try FP&A out and see how that goes, because I was really, liking that. And so after I graduated, I started Intermountain in their FP&A division, and they were just going through the budgeting for the next year, kind of reviewing the previous year's budget. How did they do? What areas could they improve in? What areas did they miss in? And focus on those areas that we missed. Also reviewing how doctors were paid, whether it was on a salary, whether it was for how many patients they saw. So, I mean, it was just a lot of different, I guess, scenarios that you had to run financial models for. And I found that when I went back to school and doing that for a few months, I really liked financial modeling. And so that was one area that I was like, oh, this is interesting. And then my last big bullet point, recruited to work at Snap on the mergers and acquisitions team. Or a recruiter actually reached out and was like, hey, I think I've looked at your resume. I've looked at your, I don't know how she got my resume. A.
You didn't ask.
And no,
Okay.
I didn't ask. I should have. And B, she said, she mentioned something about your LinkedIn, and you're like, and we really enjoy, or we really liked your LinkedIn and think you would be a good fit. And so started, the recruiting process, had about 3 or 4 interviews. They liked me. I was able to be hired on at Snap Finance. Questions?
What does Snap do?
Great question. So Snap Finance is a financing company, alternative lending for people that don't have perfect credit. So let's say something pops up and my water heater breaks, right? I don't have $1,000. I don't have a credit card. I don't have access to credit at all. And so what we do is we partner with different shops around the country and offer that alternative financing. So we'd say, hey, you know what? We'll offer you that $1,000, and we'll have you pay that over a year. And so that's kind of what Snap currently does. So again, these are for people that maybe don't have traditional credit scores or a thin file credit score, meaning they don't really have, good credit or credit at all. So it gives them an opportunity, instead of going without a water heater, we can provide them a water heater that companies otherwise wouldn't.
So you're on the mergers and acquisitions team. What is that kind of day to day? Is it, 'cause when I think mergers, I think like kind of big things that happen.
Perfect. I'm gonna get to that in a sec. And I'll go through my day-to-day here shortly. Questions? Is there a hand raised over here? Okay. So yeah, so we just do financing, and like kind of going down that path. So my day-to-day for mergers and acquisitions, I do a lot of researching, seeing what companies we could acquire. We're kind of in the lending business. And so we want to go ahead, that's our bread and butter, or what we're good at. And so if we can offer maybe other credit products to build people's credit scores, that would be something that would definitely help. So that leading into it, that's something that we just barely acquired. But going back to my day-to-day, do a lot of researching, do a lot of financial modeling, making sure things work. With the recent acquisition that we did, had to build reporting because they didn't currently do reporting. And I'll get into that here in a sec. What else do I do day to day? Depends on the week. I'll be traveling too, to check out different companies, meet with different companies. In our kind of team, so our team's built, there was 4 of us. So we had a chief commercial officer, we had an ex-CFO, and then my manager who's a director, and then me. And so there were 4 of us kind of running that show, and still running that show right now. Yeah, we would build presentations for board meetings. We would build presentations to show the companies that we're looking to acquire why we want to acquire them, what's the value prop to them, what's the value prop to us. It's a little bit of a selling kind of thing too as well. Like people right now, people want to sell their companies because they just want to get out, especially in the financial services space. About 1.5 years ago, it was the opposite, because I don't know if you guys have been following or follow this pretty closely, but money in the private markets, it was astronomical, and still is, but people are being more cognizant because there's so many big companies that are now failing, or there's bigger scrutiny on investments that people are making. Yeah, so I would say, a lot of researching, finding out what's going on in the markets, even the private markets as well, building presentations, meeting with potential acquisition targets, partnerships, and then building models. So great question, thank you. Yeah.
What resources or tools do you use for your in-person?
So we use PitchBook. I don't know if you guys are familiar with PitchBook, Cap IQ. We use a lot of CBS Insights as well. We use a few others. Yeah, we use a few of those. I don't know if you're too familiar. We don't use too much of Bloomberg. I did get a Bloomberg license when I went back, or I got Bloomberg certified when I went back to grad school. I don't know if they offer it here.
We used to, some classes we actually require it, but I don't know if it's. I haven't talked to anybody that's been doing it lately. You can still just get on the Bloomberg terminals and do it on your own. You don't need to.
Correct.
You can have it as part of the class, so.
Yeah, that's what I did. Just got certified on mine, but there are Bloomberg terminals.
Yeah, got some in the basement.
Okay, sweet. Well, there you go. I would highly recommend learning as much as you can from that. Any follow-ups? Okay, I saw more hands.
My question is this.
Okay, perfect.
When you say modeling, are you modeling the target? Are you modeling the integration of the target, or all of the above? Like, just give us an idea, a flavor of what that modeling looks like.
Yeah, for sure. So it's all the above. So when maybe I'll back up. So when you're looking to acquire a company, most companies have financial models that they already build for the following year, right? And so when you get that, what do? You want to see if it seems correct, right? And more likely than not, at least in my experience, the first year of the financial model seems correct, and then after that, it grows exponentially. And it's like, whoa, they're really thinking they're going to hit it big. So we first examine kind of the external party's financial model, and we kind of just make sure it seems correct, seems reasonable. Then we build our own. And then with the case of an acquisition we just closed last year, we built another financial model inclusive of our current business at Snap and our new business. And the new business that we got was a credit card. And so with a credit card and loans that we're giving, there's going to be some people that would forego the loan and go to a credit card. So we'd just be cannibalizing our existing business. And so to Professor Whitby's point, you want to make sure that the financial model that you build, I guess, accounts for both the new business growth and then the cannibalization of the current business.
We got an Excel, using other software, what are you using?
We use Excel a lot, so lots of modeling in Excel. We use a lot of data tools as well. I don't know if you guys have heard of Alteryx. It's more of an SQL based coding. We do code in Python. So yeah, it's very interesting. And so, but yeah, to Professor Whitby's point, we do lots of our modeling in Excel, and they're very complex modeling. I would say some points to modeling. Never hard code anything. Makes life very hard. To find an error, to find anything. That would be my one point of emphasis.
Explain, what do you mean by that?
Hard coding. So if you have, let's say, how do I explain this? If you have an equation that you're building out, you always want to reference different cells. So let's say I want to do an easy calculation of 5 plus 5. Don't ever put equals 5 plus 5. Just reference different cells. So when you go through, you can change those cells. Instead of 5 plus 5, you could change both cells to 6. You could change whatever you want, and then it all automatically recalculates. And so, meaning hard coding, that's what I mean. And then just some basic Excel modeling. Like, for example, if I don't know how much you guys are into Excel modeling, but if it's linked somewhere, we always highlight it green. If it's something you can input, highlight it blue. If it's calculation, keep it black. And that's what we do. And it makes it a lot easier when you're going through models, when you're building it and someone else wants to look at it, they know, oh, it's linked. Or, oh, this one you can just input. And so there's some Excel tips. So. Any questions? Yep.
So to obtain the financial model, that's from the company you inquired first, like do the research, right? And then you reach out and ask for the model to get an estimate, right?
Yep.
And y'all just
Yep.
trade off.
So, yeah, so I'm gonna get back into this now, and I'll answer your question here in a sec. So with the acquisition of a credit card, we started that in about I think it was December of 2021 is when we found our first credit card company that we wanted to, it was small enough for us to acquire. And we're like, okay, let's try it. And so kind of how it starts is we met them at a conference. We're like, hey, this would be interesting. Invited them to our offices in Salt Lake. We met with them. Of course, they had a model we wanted. Being finance guys, we're like, yeah, let's grab your model. Let's look at it. Didn't seem too terrible. We're like, okay, sweet. Let's keep it going. And then as you do, so going back to what M&A does is first we did our financial analysis. Does this make sense? Do we want to get into this business? Well, of course we do. Do their models look all right? Sure, we can build our models too, based on what we think. Then we start the due diligence process. And that is very fun. It's a lot of work. You get all sorts of documents, you get how they're running their businesses, you have lawyers looking at documents, you have compliance people looking at documents, making sure their compliance is good. It's just a big conglomerate of just researching, making sure everything looks good. Takes a little while to do it. And a fun fact, you'll never get to a point where you're like, man, I feel 100% confident there's nothing here. Because you're never going to get there. There's always some type of wart on it. There's always some type of issue that you won't find during your due diligence. You just try and find as much as you can. And so while we were going down that path with this one company, credit card company, we came across another one. We're like, well, I like the look and feel of this. This looks a lot cooler than the other one. Let's try and do that one too. So we are trying to focus on two different companies at one time. Typically in an M&A, that doesn't happen. You find one company and keep going until it's like, hey, we're going to buy it, or the deal's going to blow up. We're not going to do it. So we had actually two auctions. And this was during, I don't know, the height of fintech, meaning they were getting valuations that were astronomically high. This was beginning of 2022. And so the second company that we wanted to acquire looked a lot better. It seemed like they were running a lot smoother. They wanted a valuation that was way, way, way too high that we didn't want to buy. So we let them go for a little while. And their other option with what they were trying to do is they were trying to raise some money. So they either wanted to be bought out or they wanted to raise money. So they went to the market, tried to raise money, couldn't. So they came back to us while we were still doing due diligence on the other company. And then we were able to get some documents signed, so kind of like a letter of intent. They're called LOIs. Just meaning, hey, we've got an intent to buy you guys. And so we had one signed with them. We kept doing due diligence, had to redo models, and then all along the way also, we had to be building presentations to keep our board of directors in the loop, because they're the ones that would approve if we bought the company or not. And so we had to keep them in the loop, as well as, make sure that we're doing all of this. And so after that, we cut ties with the first company because we started doing due diligence, found a lot of issues that we didn't want to take the risk on. And we cut ties with them. We ended up going with the second company that we were trying to acquire, and we purchased them like last year, and it was a long winding road. So questions about kind of the process of mergers and acquisition? Yeah.
So about how many mergers or acquisitions is occurring in a year? You guys do a lot, or is it just like a few?
We'll try and do a few. We definitely don't do a lot. Just because A, you have to have the money to do it, and B, you have to have the bandwidth. And with the small team that we have, we don't have so much time and energy to do so however much. But now there's another area of finance that's all they do is help fundraise, help mergers and acquisitions, kind of be advisors for them, and that's in investment banking. And they try and do as many deals as they can. And I think you have a few people that are either in private equity or investment banking that are coming. So I'll let them, I won't steal their thunder. Yeah, that's kind of what they focus on, is just going out and just doing as many deals and making sure the deals are correct for them. So
How big is Snap?
Snap, there's about 1,300 employees. I think we did about 1.6 billion in loans last year. So it's quite a big dollar amount. And then probably the biggest area that we have at Snap is our salespeople. So we have salespeople all across the United States. They go into like Big O Tires, let's say. So for example, Big O Tires is one of our clients. So if you go in and you want to get financing, that's through Snap Finance. So we have all sorts of salespeople that go out across the United States and just kind of get either the small shops or like the big shops. We focus on furniture, mattresses, jewelry, tires, trims, kind of those areas.
And then if you were going to Big O, do you know it's Snap, or is it like branded as the kind of Big O financing, or how does that?
It's branded Snap.
Snap.
Yeah. Yep. Any other questions about kind of my background? And I'll get into a few other questions for you guys. What are we looking at?
I have a question.
Yeah,
What is your competitor? Are you like out with the company, and what's the future of the company?
yeah, for sure. So the company Snap Finance has been around for about 10 years. It's founded in 2012. Future of the company, I think most companies want to do is have an exit. And an exit meaning being bought by someone else or going public. And so I think that's what the plan is in the next few years, to have an exit. So great question. There's no other questions about background. So skills, I wish I had more exposure in college. I wish I had more exposure to modeling. I really enjoy financial modeling. And I wish, and maybe there is a class now.
Yeah, we do. We don't teach it all the time, but we actually have a financial modeling class where we just go through an FP&A and investment banking, a whole bunch of different ones, but
Highly recommend.
Yeah, but this is one that we just don't necessarily have the bandwidth to teach all the time, and so.
Yeah, I would highly recommend that. I took a financial modeling class in my graduate degree. And it was very eye-opening how little I knew about financial modeling. It's like, whoa, this is actually what we can do. So we did like a M&A transaction, but it was a leveraged buyout. So instead of using stock, we used cash. And what our return was on cash. And so we would just borrow against that. So we modeled that. We modeled financial statements going into the future, which was very interesting, just based on past performances. And there was a few other things like we modeled how a stock would how a stock would operate in the future, what we would think. And so it was really cool. So I wish I had in my undergrad, and while I was in your guys' shoes, I wish I had a financial modeling class that I took. If you're going to go into finance, it wouldn't hurt you at all. Another thing, and I know when I was graduating, they started doing big data queries. I can't remember. There was like a big data class. But learning a coding language is very, very useful. Like I mentioned, I currently use SQL, Python. I don't use too much R. I know in Snap Finance, there's a lot of people on the data side that use R. This was something that my manager told me when I first started. He's like, you know what? If you can manipulate the data and be a business user of the data and build models on the data, that's going to give you a leg up on just the person that can build models. So that would be one thing that I wish I had more exposure when I was in your guys' shoes. And then presenting, I think it's a trait or a characteristic that anyone can use. If it's in your professional career, if it's in your personal life, knowing how to present yourself, knowing how to present things, you can't go wrong. Especially what I'm doing now, we do a lot of presentations. Like before, I think it was right before I came up here, I was on a call and presenting a PowerPoint to the CFO, the Chief Commercial Officer, and the Chief Marketing Officer. It's just something that you'll always need. And then the last thing, kind of the last bullet point, was just like real life business case scenarios. There was one class in particular that I took at the University of Utah. Every single week, we would take a business case from Harvard Business. I think they have like a library of business cases. And for 1 week, and we would be broken out into groups of four, and work through a business case. Like one that I can remember was a lumber yard, and they had problems with their cash flow. Well, if they would have paid off in their 30-day window to get a 2% discount, they wouldn't have issues with the cash flow. Maybe at the beginning they would be hurting for cash, but over time you would see, oh, you would actually have more cash because you're paying a discount on the lumber that you're paying for. So it was just very interesting, very insightful to see, like, hey, put yourself in this situation as a lumber yard accounting person. What can you do differently? Put yourself as a computer chip manufacturer. What can you do to improve your margins? It was just thinking outside the box of, hey, there's a different situation. What can we do? And I really enjoyed that. And so in that class, we also had an opportunity to present our business case to the whole class. as to why we thought that. Everyone worked on the same thing, everyone had different answers. But we would then share our answers with them and say, hey, this is what we would recommend. And so it was really neat. Any questions about any of the skills I wish I had more exposure to?
So how much code are you using? Like, are you, because you're gathering all the data and then just compiling it and then dumping it into a spreadsheet for the most part, or are you using, like, how are you linking your SQL and Python into what you're doing on a daily basis?
Yeah, good point. So the data that we are getting for credit cards, they've been running it for a few years. And so Excel only has a max of 1 million rows per sheet. And so we had a lot more than that. So we would, in SQL and Python, you can manipulate the data super quick. Once you get, I mean, you could do it in Excel if you wanted to. It would just take a long time and you would have to spread it out over different sheets. With SQL, with Python, you can go in and manipulate the data really quick. You can spit it out and then you can also manipulate it from there. And so that's what we usually do. So we just take a ton of data, say, hey, we want to look at this segment of this segment of this segment. And then we spit out that, and then we can start running models on that. So. Okay. So what does our firm look for when hiring someone new? So kind of going to your point previously, as you can tell, we're looking for someone who can hit the ground running. I mean, it's pretty self-explanatory. If you're not self-driven, it's going to be very hard to find a job a bunch of places. Curiosity, always looking to learn more. I don't know how, I mean, at Snap, I've only been here, it'll be coming up on 2 years. I've learned more at Snap than my whole time at Morgan Stanley. It's just unbelievable how much I would say Snap has helped me grow. I think another one that's very big for us is challenging the status quo. So I don't know how many times you've gone into maybe, and maybe this doesn't apply to you, but going into Morgan Stanley, let's say, they had a structured way of doing things, right? Then at Snap, they want us to, why are we doing it this way? Come up with a new way that's more efficient, with a new way that drives more volume, that drives better efficacy. So always look for improvements. Specifically on my team, researching, that's a big part of, what we do, what's out in the market, keeping yourself up to date on what's going on in the world. And then again, I've already harped on these a little bit, but modeling skills, presenting skills. And then just some general career advice or life advice. I wouldn't say this is in any order. I would say, me specifically, I don't like to personally take on new problems to solve or new projects that I don't know too much about, right? I think that goes for a few of us in here, but that's where you learn the most. So don't be worried about taking on new projects. Schedule your day out. I know it kind of sounds cheesy, and most of the time my day gets thrown out the window on different fires that come up that you're like, oh crap, we got to do this. But I mean, at the beginning of the day, you have more brain power, focus on the most important things. And at the end of the day, do the more mundane things that don't take too much brain power. The third one be proactive and get to know as many people as you can. I would imagine majority of you guys have heard, it's not what you know, it's who you know. It's so true. I would say, you can learn a lot of things, but you need to build relationships. Those last for a long time. I think I already mentioned this, but keep your resume and LinkedIn updated. I'm terrible at it. If you guys look at my resume, LinkedIn, I don't think I've updated it in a long time, but I would keep that updated. Keep it updated with the times. Have people look at it. You guys are in a great spot to have, experts in this. I can't remember which class it was. I think it was required at the time. We went through LinkedIn, we went through resumes for about a month between the two. It was very nice, very helpful. I know your career advisors would love to help you with that. I would just take advantage of it. And then stay connected with past coworkers or university colleagues. That's very important too. You never know what could happen. I don't know how many of you have been watching all the different layoffs here in Utah and down in Lehigh. There's a lot of tech companies that are struggling financially and laying off people. I mean, that in itself, just staying connected with people that know people that know people, you never know what's going to happen. And it's not just with layoffs, but I mean, new opportunities that might be cool. And then while you're in school, just take advantage of learning, whether it's clubs, internships, extracurricular activities. Do you guys still do the Focus Fridays? How many of you guys go to those Focus Fridays? All right, there needs to be more. Those are invaluable, even though you maybe don't think that, hey, I could go up skiing at Beaver, or I could go to these Focus Fridays. I understand probably not all of them apply to maybe finance students, but you can network there so much. I would definitely recommend that. And then, and I already talked about, taking advantage of maybe the Bloomberg terminal, seeing if you really, want to learn something new. You have access to it. Looks like in the basement of the business center or the business building. And then last thing, I would say just make sure the major you choose, if it's not going to be in finance, or if it is going to be in finance, that you love what you're doing. While you're in school, learn as much as you can, figure out what you want to do. I know finance is so dang broad that it's like, wow, where could I go? I could go into corporate finance. I could go to investment banking. I could go into financial operations. I could go into wealth management. You have to figure it out. Figure out what you love and just run with it. It took me a little while. I thought I knew, graduating with my undergrad, I was like, oh, I think I know what I want to do. I don't know. I don't want to be doing this. I don't want to be doing FP&A. Right now, I love what I'm doing. And don't be afraid to change what you're doing either. I don't know how many people, I think while I was at Morgan Stanley, there was probably about half of my team that weren't even finance majors. They were psychology, they were all over the place. I think there was even an engineer. I was like, wow. But don't be afraid to change your major if it doesn't work out for you. And then just some of my final thoughts as I was driving up here. I just wanted to write a few down. I know there's a lot of pressure about maybe not going to school or getting a college degree. What does this mean? In my personal life, in my opinion, my college degrees have got me where I'm at, and I'm so thankful for them. I think education, especially in the area that we're currently in finance, is invaluable. I think, but I wouldn't change going back to school for a master's degree either. That master's degree paid off for me within a year and a half. Like not even working during that full year of going to school, I found a better job. I found a job that I loved, found a job that paid a lot better. I found a job that, that fits me. And I love it. I wish, while I was in your guys' shoes, I wish I was more, I connected more with people. I went to more clubs. I was in the finance and economics club. I don't know if that's still around. But I wish I was in other clubs, even if it's not in finance. You get to learn about new people. You get to network with new people. I would recommend, if you haven't gotten an internship or hadn't had a taste in finance, do it before you graduate, just to make sure. There was a few people that graduated in finance that they're not even in finance anymore, and vice versa. So everything you can do to learn. And then kind of the last thing that I wanted to end with was that first paragraph from GPT. It is important to choose a career path that aligns with your interests, skills, and career goals. With hard work and dedication, a degree in finance can open doors to a successful career. I believe that. So hopefully you've enjoyed it. I don't know if you guys have any questions. Feel free to reach out to me. I got my email, LinkedIn. I barely found out there's a QR code. So feel free to connect with me. And then I've listed my phone number if you guys want to give me a call, text me, whatever. So yeah, any last questions?
Okay, perfect. That was I was gonna say is, I'll put that up online, but you got here, you can scan that, or I'll actually post that on the Canvas page. Big hand for coming out.